Hey everyone, my name's Andy. My channel's Finding Value. If you like crushing large chart patterns, killing it in the accounts, subscribe and give me a thumbs up button for this content, please. If you have comments, if you want to see different things, put it in the comment section. I'm pretty well versed in the majority of things, even in this world in general. I've read a lot of stuff. So if you have questions, even if it's life related, put it in the comment section. I can help you out. Today we're going to go over buy and hold and how important this is. We're coming up on a commodity cycle, and people are asking me about exit strategies. Number one, this is way early to be asking about exit strategies. I do have a couple of videos specifically tailored to exit strategies and when I think the exits are and what indicators we're looking at for an exit. But right now, the key thing to take away is we need to be buying and we need to be holding, not going in and out. I don't care if this market goes up or down 20, 30%. The valuations are cheap and we could see massive moves to the upside. And I don't want you to be caught on the outside of those stocks when they move higher. I got caught previous bull market out of some of these stocks when they really took off, and I never got back in. I don't want that to happen to anyone on this channel. I want you to focus on the valuations and the market conditions and hold. At least that's my approach. So I'm going to go through this presentation. I call it buy and hold. So I'm going to talk a little bit first about 2021 and the top performers. What sectors will do well? And these are the sectors that I think will do well. Real estate's going to continue to do well. Precious metals are going to do well. Oil and natural gas, uranium, copper, nickel, and all of the other commodities are most other commodities, and I mean not all of them. But these are the ones that I'm focusing on because of the market deficits in the future. And I'm sure there's a couple of other ones, like cobalt, I'm sure will do all right. There's a couple of other ones that look pretty good, but these are the ones that I really, really like. These pique my interest because the deficits are super large in the future, and they're prime. Their charts look absolutely primed to kill it. And I'm sure potash will do well and all these other ones. So relax if it's not on this. These are the ones that I'm focusing on. So how do you play this? My opinion is to continue to cost average into strength in these sectors. Look at the valuations and market conditions. I do that on a weekly basis to show you what the ratios look like, and I give you real estate updates on a monthly basis to show you what those market conditions look like in terms of an inflation front. I don't see these changing much this year to not be cost averaging in. So I'm going to continue to cost average in with the money that I make and my income into these sectors. I would focus on great companies in every sector. I would not limit myself to only one or two of these sectors. Something is going to go berserk, and I want to capture that massive move. A little in a lot is going to go a long way in all of these sectors. So spreading your money out through a betting strategy or an investment strategy, I think is a good bet. And if I had, let's say, $20,000, you might want to put $500 in each company and spread it out in the best companies that you can find. Because all it takes is a small 2% of your, that would be at 1%, 500 of 20,000 would be 1%, could turn into 100% of your portfolio. You could turn $500 into $20,000 pretty easily in some of these companies. Multi-year, so we're looking at a multi-year holding strategy. We are holding these investments for many years. This is just the beginning. I'm not trying to time this market. I'm not going in and out. When the valuations are cheap, you buy it and you sit tight. The valuations, when I refer to that, are the ratios. The ratios of commodities to S&P 500 and the ratios of gold to whatever commodity you hold. I failed to do this last bull market. I don't want you to make the same mistakes. And I'm going to say this, not this time, no chance, no way, never again will I make that mistake. I have learned from that mistake and it is burned into my memory. I'm not trading in and out, and I'm not giving anyone the shares that are in my account. I'm sorry. So asymmetric bets. Some of these sectors have companies that will return amounts of money that you cannot think of. We are looking for 10 to 200x plus baggers. They're out there. They're probably in my portfolio. I'm not selling them. Good luck getting my shares. Don't worry about the pullbacks. Do not worry about a 30 or 40% market crash from some of these, we'll call it insolvencies. If it comes, use them as buying opportunities. The structure, the underlying structural fundamental piece of this and the valuations are going to support these things into the future. It's only going to delay the move if we have a crisis, an insolvency crisis. Don't let it scare you out of these opportunities. That's my opinion. Develop investment strategies to invest more money on pullbacks if they come. So here's my crazy estimates at top of a bull market. I'm gonna throw them out there. And if you disagree with them, that's fine. But these are my estimates. This is what I think is gonna happen at the top of the bull market. I think gold's gonna go between $4,000 and $15,000 an ounce. All the rest of these are simple math of ratios of what tops look like. So if gold goes to 4,000, silver at a 20 ratio is 200 an ounce. At 15,000, it's $1,000 an ounce. Oil is going to be somewhere between $400 and $1,500 a barrel. Crazy, I know, but that's what the ratios tell us. That's what market tops look like. That's what happens when you go and you try to mine a whole bunch of low-grade ore, copper, nickel, cobalt, uranium. We're all going to be massively mining this stuff. Do you think oil is going to remain flat if we go over 100 and something million barrels a day of demand? Probably not. And what happens when we cut back all this investment to put it into renewables? But no one has renewable cars yet or electric cars. It's going to drive oil through the roof. That's what I think is going to happen. I think uranium is going to go between $800 and $3,000 a pound if you use those gold numbers, and if it bottoms at a 1 ounce to 5 pounds uranium value. And that's what other market tops have done. Copper is going to be somewhere between $6 and $75 a pound. And keep in mind, everyone's looking at this from today. Think of it as the dollar falling out. There's an inflation, a large inflation aspect behind this, and then there's the supply-demand aspect. It's both of those things tied together. It's not just supply and demand. If you can't wrap your head around this, you don't have to. This is what market tops looked like in the past. I'm just fast forwarding it. No one would have guessed that the last bull market would have had oil at $140 a barrel. No one would have guessed that uranium went to $140, $150 a pound. They wouldn't have guessed that. And you would have said, you're crazy. But it happened. This will probably happen. Now, the conclusion here is every single sector has a lot to offer. The valuations are still ridiculously cheap. Spread the money out amongst the asymmetric bets using an investment strategy. I recommend buy and hold. No trading in and out. That is what I am doing. You can do what you want to do, but last bull market, I would have been much better off buying and holding and looking at the valuation metrics for my sell points along with the housing starts. When the housing starts decline, that means that deflation is coming, that the real estate sector is done. It is ceasing to expand, and when it ceases to expand, inflation turns into deflation. It's as simple as that. So, get your companies, spread it out, get an investment strategy, and find them and spread them. And the reason we're spreading them is because all it takes is one 1,000 bagger or 500 bagger to transform your portfolio. Now, the second part of that is you better be able to hold on the entire time to get that 500 bagger or 1,000 bagger. You can't sell out. You can't sell out for a 300% gain or a 70% gain. I'm up on some of my investments over 400 or 500% right now. Bannerman's killing it. SM Energy's killing it. Goviax is starting to kill it. Global Atomic's doing very well. I bought some of these back quite a long time ago. Encore Energy is a few 100% now, over 200%. So base low is up over that as well. So buy it, hold on, look at the valuations. The valuations, stare at those valuations, and if the valuations are good, cost average in. If you like this content, give me a thumbs up. Give me comments below of what you guys think of this video. Let me know if I'm wrong. Let me know what you've learned over your investment career. Let everyone know the mistakes that you made. I made the mistake. We all do it. Let me know what your mistakes are and what you need to improve, and put it in the comments section. Subscribe if you haven't, because guys, this I don't think there's too many channels out there making more money than this channel, at least at the moment. So subscribe, thumb up, comment, and thank you for listening. This is Finding Value.